I'd say the last 6 months to do what we did, I still don't know how we did it. Thank goodness for a couple, two, three key investors that stepped up and helped us bridge. But I arrived at the point right after that promotion on the third. I realized it's impossible for this business to become what it's supposed to become and what it's capable of, and take care of the financial liabilities that we have. We have a significant amount of short-term debt I took out last spring prior to the equity round that's coming up in April. They're my friends, they're people I know. One or two of them might be on this call. And also we have, the leases that we're still battling through. We have accounts payable that we've got some older stuff, we've got some newer stuff, and we've kept everybody paid that we could, but we also didn't have the financial oxygen to really build this business properly. So I made the decision, which, seemed insane at the time on the 3rd of January when I made it, which is I got to go find $40 to $50 million. One, to clean up some of the past, and two, to be able to put the business in a position to succeed, and three, protect my friends, which are everybody on this call and everybody that was on the call this morning. I take extremely seriously the responsibility I have for the money that you earned, that you entrusted me with, and protecting that is a massive priority for me. And I don't even want to tell you how many times we were at death's door and somehow, some way we fought through, and we did. And that's the good news. And so on the 3rd, I made the decision, I'm going to reach out to a couple friends that I know that do large investments. One of them happens to run the Scalar office of Utah. And if you know who Scalar is, they are the second largest valuation firm. They do a ton of boutique M&A stuff. They typically play in the $50 million to $200 million deal range, but do a lot of valuations. And so I sent it to my friend and said, hey, just tell me what you think. This is what I've done up through, December. This is the 4-month snapshot. He sent it off to his New York office and said, this is unbelievable. To do what you've done with subscriptions as the foundation, we've never seen it in 15 years of doing, dozens and dozens of e-commerce valuations for fast-growing companies looking to raise money or looking to exit. And so I put together an investor presentation. They reached out to kind of their go-to investor. His name is Rodney. He's with a group called TW Funds, and they've done 35 deals together over the last 7 years. My friend Jameson, who runs the Scalar office, and they reached out to him, and I put together a couple days later. We were on a call with Rodney and his team. 2 days after that, they came in and did an on-site due diligence. And 3 or 4 days after that, we had completed a pretty exhaustive due diligence process, and we had a term sheet. And so there were 2 things that I told Rodney on the first call. I said, there's 2 non-negotiable things for me. One is I will not do a deal that I can't clean up the people that I owe money to from the past and from the debt round. And I said, 2, I will not leave my seed round investors with the ones without a chair when the music stops. I said, I won't do it. And so that was sort of the backdrop. And as we worked through the deal, I'm going to walk you through what it means and where we landed. And as a preface, I met with all 5 of our largest investors. All 5 of them are north of $1 million, and they represent 60% of the ownership block of the seed round. So I'll give you the context of how much equity we sold in the seed round, but I already met with all of them last week. I wasn't going to do these meetings without their blessing and their sign off that they were happy and felt really good about everything. And so just know that already took place prior to this. But let me walk you through a presentation. It'll make a lot more sense when I show it, and I'm going to just show it to you, and then we will open it up for Q&A here. But let me go into my presentation and just make sure this is running here. Okay. So basically what we did is we presented to them, we wanted to raise 50 million. That was our starting point. Well, we received a term sheet, and this particular group, when they do a term sheet, unlike most large groups, that's sort of their binding agreement, and then everything is kind of a closing process. So they committed to $44 million, And this was the use of proceeds that came out of it. We had 12 million earmarked for what I call the cleanup bucket. Everything kind of to clean up the past, clean up the debt, the accounts payable. That was one of my non-negotiable points. And then I'll walk you through what it means for you guys. We also wanted to make sure we finished our Utah facility. It's going to take a little under 2 million to kind of get that 100% done, so it can do the 15 to 17 million a month in revenue. Our Texas distribution center was working off Costco tables because we didn't have the money to do it right. And so we needed to put some money into some infrastructure there in Texas, but the most of it was going to go to an Ohio production and fulfillment center. We already have fulfillment, but for us to create the runway for the next 30 to 40 million a month, we needed a building. We're not going to buy it. That's really the TIs and the equipment side of it. We're hoping it doesn't quite. Our goal is to have that open by the beginning of January 2025. And then it gives us 22 million of working capital, most of which will go into marketing. That's the bulk of the spend. There is some front loading of some of our inventory, and then we want to pre-purchase and negotiate some of our meat contracts to get lower pricing. And then I wanted a healthy cash reserve. So that's the breakdown of the use of proceeds. So here's what it means. I will repeat this when we get through the process. So just if you want to, there'll be questions at the end. I know there will be, but let me get through it. What they are buying is 33% of the equity in a new entity called Just Meats LLC. Your equity is part of a 46% block, which is I call the seed round investors of Feastbox LLC. Your equity would stay in that entity, and I'll explain why in a second. But they would basically be investing $44 million at $133 million valuation, and they would receive 33% of the company. My entity, which is RSJ Family Holdings, would maintain 67%. So here was the deal breaker for Rodney. He basically told me, unless you are majority, I won't do the deal. Unless you're controlling and have controlling interest, I can't do it. I can't represent it to Sequoia Capital, he was syndicating the deal to. And so that became I wouldn't say a sticking point, but became a point of clarity. And I said, okay, how do we solve this for my seed round? How do I keep them on an equity-like financial path? And I can't just slam them into the 15 or 16% left. I'm not going to do it. And so here's what we came up with. Jameson and Rodney reached out to JP Morgan. They sent them our file that was now complete with due diligence, sent them our projections in our pro forma. And we were able to secure a, sorry, I'm jumped ahead a little bit. We were able to secure a $200 to $250 million mezzanine debt instrument through JP Morgan that will fund either February or March of 2025. As part of this, they've committed. The person that's involved is the decision maker. Jameson knows him well. Rodney knows him well. And they've committed that, hey, based on hitting two benchmarks, 10 million a month by the end of the year and at least break even. And I kind of laughed. I said, there's no way on earth I'm just going to be at break even by the end of the year. But that was the two criteria. And they said, then your January has to show the uptick to the 12 million that you show in your pro forma. And you got to go through audited financials, of course, which wasn't a surprise. We got through all that. They stayed committed. We've got a call actually tomorrow that we're doing. They're going to start receiving monthly updates. And they have committed to Rodney and Jameson that they will fund that provided I hit that benchmarks. In fact, they've been pushing really hard to make sure that we don't go shop it to someone else. Without going into the details, your equity staying in Feastbox will be secured against the 67% of Just Meats LLC. You're going to be guaranteed a 6 or 11 times return off of the invested amount based on a couple of criteria. Let me walk you through it, and then I'm going to give you an example. So essentially, there'll be two equity holders, TW funds, under which Sequoia Capital is a syndicated group under TW, and my entity, which will create a secured purchase agreement that will still all be capital gains. It'll all trigger the same way you would on your normal capital gains. And these are sort of the trigger points. So we have that debt facility. They've committed to close in February. I put in this structure by the end of March. everyone will receive at a minimum the payment of their principal. So that's going to get paid out by the end of March 25, no matter what. And that principal is the amount that shows, the dollar amount that shows in your purchase agreement docs that you did with Shane whenever you invested. So some of you, a few of you got a little bit of an additional amount of equity because you came through another investor. I don't know, there was a handful. That whatever that dollar amount shows, that's your principal. That will pay out no matter what, first quarter of 25. In addition, in January, you will have the option to choose to say, that was a great ride. Thank you very much. I'm tired of watching your videos every month, and I want to take my 5X return and call it a day. And you could fully exit at that point. And then you would basically be done with your investment, and you would essentially have a 6X return. The second option is you can take your principal still in first quarter, and you can say, no, I want to ride this out through the end of 26. My plan is by the second half of 2026, I plan to either one, bring on a significant investment group to allow me to harvest, and or two, potentially we would have an exit. I don't know which one it'll be, but one of those two will happen. And that's my timeline. I'm going to drive super hard for 24 and 25. You will continue to get all the normal investor updates. Your equity is still technically intact. It's just a non-operating entity that now has all the debt cleaned up, all the AP cleaned up. It'll just hold it in stasis. And if I'm not able to, I'm going to go through a next screen, but real quick, let me just recap this, and then I'm going to show you a financial example that you'll be receiving by tomorrow afternoon or Thursday morning, along with documents of how this will work. So basically, this is what it looks like. This is an example. If you had $225,000 of your principal, which again is the amount you show on your investment docs, you will receive a guaranteed payout by the 31st of March 25. More than likely, it's going to be the second half of February. But I'm putting March just to give us a little bit of wiggle room. In addition, you could choose and say, okay, that was great. You would have a guaranteed payout of 5 times your principal for a total of 1.35 million. Or you could say, you know what? I like what I'm seeing. I don't need the cash right today. I'm happy to get my principal back, and I can now reinvest that in other places. You can choose to stay through 26 and take a 10X return for a total of 2,475,000. This is both a downside protection, but it's also an upside ceiling. I just want to be super clear on that. I tried to find a way to do all of it, and the only solution we could come up with, and this was an example that Rodney gave me that they had done in another deal, and they weren't nearly as aggressive in the multiples, but for me, it's super important to me, extremely important. Everybody walks away feeling like they got a phenomenal deal, especially when you consider if we don't do this investment, we won't make it out of it. If I'm just being completely honest, there's just no way to pay off what's coming up in the next 2 to 3 months, the debt, the AP, and give the business the time and the oxygen it needs. And this accomplishes both. So your security is really my equity held, in trust, essentially. That's your security. If something happens that debt round doesn't close in 25, it automatically will trigger a private equity sale through Scalar, and they will go to market with as much of my equity, the 67%, as needed to satisfy the financial requirements of everybody's note. And by the end of 26, we will have done the second part of it one way or another. We will either sold equity, be in a position where we can get the kind of valuation that I believe we can that will allow this to happen. And so, what I tried to come up with is a mechanism to give you the upside of equity-like returns, but protect the downside. And my confidence of pulling this off is a 10 out of 10. One, Rodney called me this morning out of the blue, didn't ask him to, just said, hey, just so you know, we're on track, feeling really good. We got funds moved from Sequoia, and just kind of went through the closing details. There was no questions. There was no, it was all exactly the way the last week has gone, which is just the closing procedures, not necessarily that. And he reassured me that, if we keep doing what we're supposed to be doing and use this capital correctly, the the Q1 debt round, which basically rolls into a 2026 event without any interest expense. And that's why the two trigger points are there. So in summary, and then I'll open it up for questions here, you will receive a principal payout Q1 that will be your original principal amount on your investment docs. By January, you'll have had to decide, am I going to take the full amount or am I going to choose to wait till 26? But you have clear till January to do that. So I'm going to pull out of sharing here for a second. Let me exit out, come back out into questions. And, I just want to open it up for Q&A. I can tell you a few of the questions that got asked this morning that, I'll just hit on really quickly. One is, how do you know you're protected? Was one of the first questions. And I think really the main thing that I would say is none of this happens if this deal doesn't close, but I'm 99% we're going to get it over the finish line. I know what it feels like when someone's ready to finish. And I've never in my entire life and raising money for 30 years, ever seen a large group move as fast. And it mainly is because they're leaning on the trust they have with Scalar. They're leaning on that valuation. They're leaning on the due diligence work that they did, and they do deals together every day. They closed one this morning that was over $60 million with Scalar. And so there's a trust there, and I got to benefit from that trust. And so that's the lay of the land. I'd love to open it up for questions. I might have missed some things, but just wanted to give you guys a chance to ask anything that I didn't cover and make sure everybody has a chance that if it's a group, if it's specific to you, let's maybe take that offline. If it's applicable to the whole group, then let's dive into it. So let's go through the Q&A session of this. And if you don't have one, it's okay. I tried to cover everything, but if you do, please jump in and raise your hand. I'm happy to answer any questions that you have. So I haven't seen anybody raise their hand. So let me just kind of say this in closing. Dan raised his hand. Go ahead, Dan. Then I'll finish up after you. Go ahead. Dan.
I'd like to have a better understanding with this 46% Feastbox LLC, and now there's a new entity, and I don't know when others on the call invested, but I thought I was investing in the whole company.
So there's an
are we losing equity share with the creation of a separate entity?
Well, what's happening, and I'll just give you the legal structure, and then I'll give you my version of it, is there's an asset purchase from Just Meats LLC, which is the new entity, to Feastbox to clean up the $10 to $11 million of liabilities that are in there. The equity holders, of which obviously you are one, along with everybody else on this call, your equity stays essentially in that entity, but it's a secured, guaranteed purchase agreement secured by the equity in the new entity. So the reality is, whether it's what we would like or whether what we would want, if we don't do this deal without a massive capital call from every investor that would be in the millions of dollars combined, we don't have a way to get through the next 3 to 4 months and give this business the chance to succeed. So the short answer is, legally, yes, it is a new entity. You're getting a guaranteed payout of a 6 times or a 11 times your investment. So it's being treated like an equity payout at a $300 million valuation. And that was the place we landed to ensure everybody, one, was protected, and two, had a path to know what they could count on over the next 12 to 24 months, depending on how long they stay in. Does that answer it, Dan?
Yeah, I think so. Now, to follow that up, as far as the sale, I assume that this infusion of capital, this group getting involved, it's a guarantee buyout. Like, we're done no matter what after 12/31. There's no option to stay in the game.
Well,
Twenty-six?
at this point, if the event in 26 goes like I think it will, then yes. Meaning there's a reasonable chance that it's a full exit at that point. And so there is no go forward. It would be some new group that comes in and buys the whole thing. If it's an equity play, I believe they would likely want to present the option to convert the note or the dollar amount at that, 10x into equity at the round at whatever valuation it is. But what I can't represent is that's what will be there. Our primary focus is going to be positioning the business. So by summer of 26, we're in a spot where we can entertain options to sell. That's sort of my personal timeline. You never know and you're never guaranteed. But what I do know is with Sequoia Capital in our back pocket, and the kind of access they have to either the right investors and or the right partners to come in and purchase, I'm not worried that we'll have the chance of the best places to go. So yes, it's a guarantee. If that option exists, then everyone equally that's still in the game and hasn't exited will have that option at the same time, Dan. So it will be just like this deal. Our largest investor who did, north of $4 million to our smallest investor who did 25,000. Everybody is getting the exact same structure. And that's how we structured it to ensure that everybody got the same benefit from the capital they put at risk. And so the first thing is you're going to get your capital back at the beginning, your original capital back at the beginning of Q1 next year, and then you can choose at that point. So it's not a perfect world. There's no perfect outcome, but the only way to accomplish what we're trying to accomplish and candidly protect everybody's equity, including my own, including our employees, including everybody, was to find a partner who could come in with this kind of capital. And we were very fortunate to get the valuation we got, with some of those skeletons in the closet that they know what they are. And with the fact we only had 4 months of data, we're extremely fortunate. I've never seen it happen this fast. So that's kind of my 2 cents on it, Dan.
Okay, and I've heard you mention, you said guarantee, like guaranteed 6x payout.
Yeah.
331.
In your note,
Guaranteed
it'll literally list the dollar amounts. It's essentially a secured payment.
Okay, and when you say guarantee, I'm understanding it as guaranteed. So I want to understand the risk here, right? And staying in. Is there risk that this doesn't happen?
Well, the risk is if we don't ever valuation the market will hold. So you hold a note and your collateral is the equity. Worst case, you would have a right to be able to convert that note into equity at whatever valuation it is because it's secured and it's a guaranteed payout. So no, anything in business guaranteed? No. But is this as close to a guarantee as you're going to get? Yes. Because it's structured with the capital of $44 million coming in to give us the tools to go do what we're about to do. But your dollars that you'll see on your documents are guaranteed as a minimum payout. And the only thing that would keep it is if something unforeseen happens and the entire business blows up, which I just can't imagine after what we've been through and having capital and no debt and no liabilities and $44 million, well, $32 million to go pull it off with after we clean up the past issues. That's the guarantee. So it's a secured note with your equity being the collateral that ensures you can exercise that.
But the payout's going to depend on the valuation at the time of.
No. It's a fixed dollar amount. That's what I was trying to go through. It's literally your document's going to say, here's your principal, here's your exact payment at the 5x if you choose to take it, and here's your exact payment at the 10x. It's not based on the valuation. I'm the one taking the risk on this. You will get the guaranteed payout.
Okay. All right. Guaranteed, but not guaranteed.
Well, I'm not a bank. I only can guarantee our ability to go execute. And then if this round closes, your dollar amount will be fixed. I don't know how else to explain it.
Yeah, I guess
I
what
don't.
I'm trying to understand is, at what point is it fixed? When
It's
you
fixed the
sign the
moment you
agreement?
sign it in the next couple of days. It's fixed. I mean, I'll show you
And
this
if
sheet
I,
again. I'm going to show you one more time. I'm going to be super clear on this so that there's no confusion. I don't think I was clear enough. So I'm going to show you this so you know exactly what I'm
yeah,
talking.
I don't know if anyone I'm in, and I, what I'm understanding is we have a guarantee, but we don't have a guarantee.
So,
If they don't
I don't
end up
know,
buying
Dan, I don't know why
the
you're
company,
saying the same thing twice. You have a principal amount. You have a note that says you are secured in your position to receive a principal payment of whatever amount was on your investment docs. You will have a second that will
yeah,
be,
I get
yeah,
that, Jody. So let me ask it maybe a different way. If I, you said on January or end of this year, right? End of 2024, I need to decide, we all need to decide if we're going to take the 5X at the end of March or stay in until the end of December 26. What is what's my risk if I don't take 5X next March and decide to stay through the end of 26?
the risk is, does the business have the ability to execute the 10X payout? That's the risk. Meaning, is it financially solvent? Do we hit the 20 million projections that we have by the end of 25 that allow us to be in a position to do what we're planning to do in 26? That's your risk. That I get run over by a bus, that my entire team, my leadership team can't execute without me. Does something unforeseen happen in the market that we don't know? That's your risk. So it's
So
secured by the equity.
yeah, so the performance of the business, is it fair to say that the ultimate payout depends on the performance of the business? Because you mentioned
If
getting
the
to
if
10.
the entity is if the entity is alive, I don't know how to keep explaining the same point. I'm getting a little frustrated only because I keep saying the same thing in circles. If the business is alive, you have a note that you can use whatever legal means to go collect on that note that says, I'm owed this amount of money. The business has an obligation to pay it. If it can't, it has to cure that note minimum. So if the entity exists,
Okay.
you have a note with a legal document that says, I'm required to receive this much. If I can't, I have to be able to go collect it. So I don't know how else to explain it. I'm going to probably move on, Dan, because I'm sure there's other questions.
Yeah, that's fine. That helps. That's helpful.
Okay. Anybody else?
Thank you, Jody, for putting your hard work together to make this happen. I think it's a great deal.
Thank you. Yeah, we presented this morning to about 20. I met in person with every large investor last week that had, the most to risk. And universally, everyone has been thrilled that one, we made it out of the chaos that some of those large investors know, and two, we are guaranteeing them an equity payout without having to simply force everybody into dilution. And so that was where we landed. And, at the end of the day, my confidence level to execute the next 2 years versus what we had to pull off the last 8 or 9 months is extremely high, especially with the capital that we have in place to be able to go do it, and the backing of the right groups that if we need more, we can go get more. That's really probably the biggest thing, is we're no longer doing, individual seed round type investors. We're going able to tap into larger money, which is why JP Morgan came to the table, because of TW funds and because of Sequoia Capital. So I'm excited about it. Ultimately, it's a way for you to count on a certain dollar amount and build it into your financial plan. It's not perfect, but I think it's extremely fair. And I feel like it's the best way to ensure everybody can get an outcome that they were expecting. And ultimately, the decision is going to be in your hands come January, and you'll have all the information. You'll know exactly along the way, just like you do now. I'll be doing at least monthly, if not bi-monthly updates. And you'll be able to make the decision in January, what you feel good about and what your own financial situation is. So I'm going to drop off. And if there's individual questions that you feel like you want to get into more details, above and beyond that, I'm happy to do it. Only because I tried to keep this to 35, 40 minutes or less. But thank you for taking the time. I feel really good about where we're at, and it's going to be a breath of fresh air to go build a business without all the financial insanity that we kind of deal with on a daily basis to keep doing what we're doing. But appreciate the trust, and I'm committed to make sure everybody gets this done. And I will keep you posted, but expect tomorrow afternoon or Thursday morning, you'll kind of see the first round of documents that will outline this in detail that we can be able to figure out and get done. So appreciate it. And I'll work with each of you to make sure you have any other questions that you have answered. So thanks, everybody.
Great. Congratulations.
Thank you.